Hello everyone, and welcome back to the channel where we demystify the complex world of hard-to-borrow stocks and short squeeze dynamics. Today, we're taking a deep dive into a fascinating company that's been lighting up our screeners, the Growhub Limited, trading under the ticker TGHL. We'll break down exactly why this stock is drawing so much attention from short sellers, what that means for its price action, and what potential opportunities or risks lie ahead. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get straight into it with the Growhub Limited, or TGHL. This company operates in the technology and software infrastructure sector. Specifically, TGHL functions as an investment holding company providing crucial product traceability, data analytics, and product trading facilitation solutions both in Singapore and internationally. They help organizations track products from raw materials right through to the final product. TGHL is a relatively small player with a market cap of just $20.06 million. Now, let's look at the recent price action for TGHL. Today, TGHL has seen an impressive gain of plus 23.22%. Over the last 5 trading days, the stock is up a significant plus 41.16%. However, zooming out a bit, it's still down minus 9.40% over the last 30 days, which can often create interesting setups where short sellers might be feeling confident before a rapid turnaround. Looking at volume, TGHL traded an astounding 71,377,747 shares today compared to its 30-day average volume of 3,948,788 shares. This translates to a massive relative volume of 18.1 times its average, a clear indicator of heightened interest and activity in TGHL. What is cost to borrow and why it matters? So, why has TGHL landed on our hard-to-borrow screener? To understand that, we first need to understand what cost to borrow is. When a short seller wants to bet against a company like TGHL, they first need to borrow shares from someone who owns them. They then sell these borrowed shares, hoping to buy them back later at a lower price and return them to the lender, profiting from the difference. For the privilege of borrowing these shares, they pay a fee, known as a cost to borrow, or CTB. When a stock is hard to borrow, it means there's high demand from short sellers to borrow shares, but very few shares actually available to lend. This scarcity drives up the cost to borrow significantly, much like any supply and demand dynamic. These fees are typically annualized, meaning they show what it would cost to hold a short position for an entire year. And yes, these fees can easily exceed 100% or even several 100% annually, making it incredibly expensive for short sellers to maintain their bearish bets. Why this stock is hard to borrow right now? This brings us back to TGHL. The annualized cost to borrow fee for the Growhub Limited is a staggering 773.1%. Highlight number, think about that, short sellers are paying over 700% annually just to keep their positions open. While the CTB momentum shows a decrease of 55 percentage points over the last 5 trading days, that's off an astronomically high base, meaning it's still costing short sellers an absolute fortune to maintain their positions. Adding to the scarcity, there are only 900 shares currently available to borrow for TGHL. Emphasize, to put that in perspective, TGHL has an estimated float of 12.7 million shares. A mere 900 shares available to borrow against a float of over 12 million is an incredibly tight supply. Our internal composite squeeze score for TGHL, which combines metrics like CTB, bar supply, and price momentum, currently stands at 54.4, indicating a moderately elevated potential for a squeeze. Squeeze mechanics explained. So, what does all this mean in the context of a short squeeze? A short squeeze happens when the price of a heavily shorted stock rapidly rises, forcing short sellers to buy back shares to limit their losses. This buying action then pushes the price even higher, creating a snowball effect. For TGHL, with a cost to borrow 773.1% and only 900 shares available to borrow, the pressure on short sellers is immense. The recent plus 23.22% gain today and plus 41.16% over the last 5 days, coupled with the 18.1x average volume, suggests that some short sellers might already be feeling the heat and starting to cover their positions. Every share bought back reduces the available float even further and puts more upward pressure on the stock. It's important to remember, though, that a high cost to borrow does not guarantee a squeeze. It can also signify short sellers have strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. When evaluating a short squeeze candidate like TGHL, we always look for potential dilution risk. Dilution occurs when a company issues new shares, which increases the total supply and can depress the stock price, effectively negating any upward pressure from short covering. A short squeeze thrives on limited supply, so dilution is a major counterforce. For the Grow Hub Limited, our checks show no recent dilutive SEC filings like -1s, -3s, or 424 BS found in the last 90 days. Furthermore, there have been no recent reverse splits for TGHL in our look-back window. This is a positive sign for any potential squeeze thesis, as it means the company isn't currently adding significant new shares to the market that could absorb short covering demand. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For TGHL, keep a close eye on a few key metrics. Will that astronomical cost to borrow of 773.1% remain elevated, or even climb higher? Does the supply of borrowable shares remain incredibly scarce, or even shrink further from the current 900? We'll also be watching the price momentum. Can TGHL sustain its recent gains of plus 23.22% today and plus 41.16% over 5 days? And, importantly, will that massive volume, currently 18.1 times average, continue to pour into the stock? Sustained buying pressure from both retail and forced short covering would be critical. Remember, while TGHL's metrics are intriguing, its composite squeeze score of 54.4 suggests potential, but it's not a guaranteed short squeeze event. The Grow Hub Limited TGHL presents an incredibly interesting case study in the hard-to-borrow world. With a truly jaw-dropping cost to borrow, extremely limited shares available to short, and recent significant price and volume action, is certainly a stock to watch. As always, do your own due diligence, understand the risks, and never invest more than you can afford to lose. We hope this deep dive into TGHL has been insightful. If you found this information helpful, please like this video, subscribe to the channel for more unique stock breakdowns, and leave a comment below with any questions you have or other stocks you'd like us to analyze.